Now the following amounts are not exempt under section 10, subsection 10D. And what that means is that if there is a payment made by the payer which is covered under any of these clauses, then he is under an obligation to withhold tax on such payments. Section 80 double D subclause 3 cases. Now what this case covers is that if there's a person who provides some maintenance for a person with severe disability, then he is allowed a deduction for maintaining such a person. In cases where the person who's there with a disability dies before the individual who makes a contribution towards the maintenance of such person, the contribution is actually treated as the income of the person who has been contributing the income. That income is not exempt from tax under section 10, subsection 10D. And therefore, if such a payment is made, it is liable for deduction of tax under section 10, subsection 10D. Keyman insurance policy. Now, what is a Keyman insurance policy? Keyman insurance policy is a policy which is taken by one person. Let's say A is running a business and he has appointed B as the CEO of this business. If B dies, then the business is going to suffer huge losses. To avoid such losses or to avoid such loss of profit, what A does is he takes a policy on the life of B, who is a key man to his business. So where an insurance policy is taken towards the life of a key man, then the amount received by the person who's taken the policy in respect of a key man is not exempt from tax under section 10, subsection 10D. Therefore, if the insurance company makes a payment of Keyman insurance policy amount, they are under an obligation to withhold tax from such payments. Now, number 3, 4 and 5, the 3 cases that we are going to now look at deal with specific cases where an insurance policy is taken during a particular period. In such cases, you compare what is the premium which is being paid as a percentage of the actual capital sum assured. If the premium paid exceeds a particular percentage of the actual capital sum assured, then those payments under those policy are not exempt from tax under section 10, subsection 10D, and therefore they will be liable for deduction of TDS by the payer. So for example, if an insurance policy is taken, let me just get all of them here, For example, if an insurance policy is taken between 1/4/2003 and 31/3/2012 and the premium payable, mark the word payable, exceeds 20% of the actual capital sum assured. So if the capital sum assured under a policy is 10 lakh and the premium during the year is, let's say, 2,50,000, which is 25% of the capital sum assured, in such a case, when the amount is received on maturity of such policy, it will not be exempt from tax and therefore it will be liable for deduction of TDS by the payer. In case the insurance policy has been issued on or after 1/4/2012, then in that case, if the premium exceeds 10% of the actual capital sum assured, then it will be treated as if it is a taxable policy. However, it is not going to apply where there is a death of the person who actually dies, right? If the person who's assured or insured, I would say, he dies, then in that case the premium provisions will not be applicable. Similarly, in respect of insurance policy issued on or after 1/4/2013, for insurance of person with disability or severe disability or suffering from a disease or ailment, if the premium payable exceeds 15% of the actual capital sum assured, then in that case also, the amount which is going to be received under this policy on the death of the insured will be taxable and therefore it will be liable for deduction of TDS. Now, these are the meaning of Keyman insurance policy and actual capital sum assured, which we have discussed. What is the rate of TDS? The rate of TDS is 1% of payment on the payment to a resident. In respect of life insurance policy, there will be no surcharge or cess on top of this 1%. If the recipient does not provide a PAN number, then the rate of TDS will be 20%. This is as per the provisions of section 206AA. The provisions relating to obtaining a lower withholding tax certificate under section 197 from the assessing officer and providing it to the insurer to ensure that there is no deduction of tax are not applicable in respect of section 194DA. Thank you for watching this video. If you like this video, you can subscribe to our channel to stay updated on more such videos. You can like these videos and also share it with your friends. And if you're looking for material on this particular subject, you can visit us on our website at www.arinjayacademy.com.